Let's move a little bit to the harmonization within the Islamic community. There is the Islamic community in the Middle East, which in itself is fragmented somewhat, and then there are initiatives out of Malaysia, out of the UK, and so on. How successful do you think you've been in seeking some form of best practice in the way in which Sharia law is applied?
You see, in the absence of the IFSB, what would have happened? So we can know the scenario.
Okay.
Whether it's in the Middle East, Far East, Southeast Asia, whatever, right? Each of these countries would have adapted by themselves, each country, adapted Basel II or Basel III now, to Islamic finance. Now, their adaptation may differ from one country to another country. Hence, cross borders would be a problem, Now, by providing standards, right, that these countries can rely on, right, that would facilitate, supervision of this institution from one country to another, and then you provide a level playing field.
But what's been happening in the scholar community? I think we've now created a generation of scholars who are like superstars, and whatever they say sort of stands over and above any of the general standards, general principles being
not necessarily. I give you an example. For example, the Sharia scholars in a certain institution may approve that an institution may use a certain product, right? It's up to the regulatory authorities to allow to what extent that product can be used. If, for example, it would lead to excessive leverage, you can say you're exceeding your leverage ratio, right? So they are not above regulatory authorities, right? But we need to understand it in that context. They provide advice, right, to the institutions in terms of their products, right, i.e. its compatibility with Sharia rules and principles. Now, the use of that product in the context of risk management, right, is up to the regulatory authorities.
What do you fear most in terms of how the Islamic financial landscape will evolve? Even as more money comes into the system, as it becomes larger and executives are paid more, you get situations where the scholars will be overrated because they see themselves as being important, and they might actually undermine the base safety net that you're trying to put in place.
But we have also seen countries, for example in Malaysia, where by law, you cannot sit in more than one, Sharia board, right? This has forced market players to go and train, Sharia scholars to sit on their boards. Now, in the long run, they will have a pool, of trained Sharia scholars. I think what is needed is that we cater for the supply, because rightly so, whom you now call the minority or sitting on so many, they have exerted a lot of effort to learn the business, right? And they have excelled in that, hence they are in demand. But we don't see a lot of supply coming in, So countries should also perhaps take steps, right, to help in providing that supply. I agree, you cannot depend on a few for an industry, but in the long run, whereby you have institutions that provide the training for this. Bahrain, they have the BIBF, in Malaysia they have INSIAF, in other countries they have their own institutions. The more we, give attention to that, right, in order for Sharia scholars to be conversant in banking, economics, accounting, and finance, of course, in addition to their own knowledge in Islamic jurisprudence, right, the more we provide supply of these scholars, the more it will make this industry more stable and facilitate its growth.
At the end of the day, the quality of an Islamic finance asset or Islamic asset is dependent on enforceability. And we came very close to testing that, with the Dubai crisis, really. And today there are cases in the UK courts in terms of the enforceability of contracts. And very often you see the problem arises not so much in the interpretation of the law, but the opportunistic desire to take advantage of unclear aspects of Islamic law. What should the non-Islamic world expect to see happening to make recourse a more definitive principle in Islamic finance?
Okay. Two things. The IFSB, as early as 2004, started organizing seminars on the legal risks. I think that's what you're referring to. We have exerted a lot of efforts in trying to create awareness of the legal risks in Islamic finance. And we've also published a book on, I think it's called Global Legal Issues, right, in Islamic finance, right, whereby for the first time we addressed securitization laws, insolvency laws, trust laws, and how these should be adapted to Islamic finance. Now, recently, in the last IMF World Bank annual meetings in Washington, alongside those meetings, we organized with the World Bank a roundtable on the insolvencies. And the papers that were presented there were so good, we're presenting them in a book that will be released this March, right? So we have, I think, created a lot of awareness about the issues, right, relating to legal risks, whether these be insolvency, as we've said, trust law, securities, and whatnot. And the case you have referred to, right, doesn't go outside the sphere of these laws.
It's interesting to hear you speak that way because in commercial law, or rather in commercial infrastructure to deal with commercial trade in the mainstream, there is the principles-based approach and there is the legal or the rules-based approach which the Americans tend to take. In your writings and in your speeches, you tend to talk more about ethics. And ethics, in a way, appears to be not as persuasive as a principles-based or a rules-based approach. Do you think that the work of the IFSB in sort of promoting a non-binding ethical culture is perhaps a weaker approach than if you had been more enforceability driven?
Okay, by our articles of agreement, we are only mandated to recommend. We don't have any legal enforcement powers.
But in a way, you are a founding member of the IFSB. You could have influenced it to. But then once you put
it, but then you are impinging on sovereignty of jurisdictions, right? Indeed, none of the international standard-setting body have a legal binding enforcements, right? The Basel Committee, the International Accounting Standards Board, you name it. But instead of this, what do? We try to produce high-quality standards, right, that will convince regulatory authorities to implement them, in order to enhance the safety and stability of their own financial system.
Are you happy with the way in which your respective members have incorporated the principles that you
Before incorporating that, we had a duty, and we started doing it, the duty of facilitating the implementation of these standards. How? By educating them. We conduct a lot of training now, right? Just like the Financial Stability Institute does for the Basel Committee and others. We have conducted a number of training courses, right, in several jurisdictions and in different even languages, right, in order to educate both the regulatory authorities and the market players of the IFSB standards for them to implement them. And I think we have now seen, recently that one of the countries in the Gulf said that they're going to implement the IFSB standards.
And that would have been one. But there are a number of your members who should be, but...
Well, we always... Another market forces to that, the more you're in your industry, in your jurisdiction, the more you start having a high percentage of Islamic finance in the financial service, the more you will be looking for the IFSB, hopefully, for that. Because if, for example, 34 or 35% of your financial service is Islamic, right, then hopefully the IFSB will be of relevance there to help.
In terms of what you just said, it's interesting that a number of Middle East countries are in that transition phase, and not all of them have, necessarily very clearly adopted the principles that you put in place. And if you look at what Qatar is doing right now, trying to force feed its otherwise commercial institutions to become Islamic overnight without the infrastructure being put in place, is that a good thing? or is that going ahead of the process that you probably envisage?
Okay, let me first of all put it right. Qatar did not enforce all banks to do Islamic. What Qatar said, the central bank, they said they are not allowing conventional institutions to have Islamic windows.
So they're only dealing with the Islamic window problem.
So either you have an Islamic, a full Islamic fledge, or you have a conventional, right? They're not allowing the windows to operate, right? Perhaps they have risk management issues, how you commingle these funds, whatnot, right? Corporate governance issues. That's what the Central Bank of Qatar did, you know. And in their statement, they also said that for the Islamic banks, they will be implementing the IFSB because they believe that if, for example, you have a window, Islamic window, how would, for example, for them to calculate your capital adequacy, right? You have a different capital adequacy. If you start accepting investment accounts, then that leads to a different capital adequacy. Although we adapted the Basel Committee one by, if you take our standardized formula, we deduct it from the denominator, the assets funded by the investment accounts and whatnot, right? So we have, what they said is that you cannot have two different ones in order to have two different capital adequacy, right? So that's their position, okay? In that respect, these are market forces again and regulatory forces that could lead to the implementation of the IFSB, which we always welcome.